Good morning, everybody. It's the 26th of April. We are Signal Centre Talking Bull. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, all good, thanks, mate. How are you?
Yeah, not too bad. Thank you very much. Okay, plenty going on with the market, so let's not mess around. Let's get stuck straight in. We'll look at the headlines, then we'll go into the charts. If there are any requests, if any markets you guys are looking at and you want a second opinion on it, please feel free to post it up and we'll do our best to cover them. So headlines first of all, US consumer confidence dips. The number retreated to a 9-month low yesterday of 101.3 for April from a revised number of 104 the previous month and below expectations of an unchanged reading for the month. Consumers were less confident over the long-term labour market outlook, and the overall expectations component remained consistent with recession conditions. Also, stagflation concerns in evidence. The Philly Fed non-manufacturing index dipped further to minus 22.8 for April from 12.8 previously. Employment and inflation indicators were mixed, although there was some stronger upward pressure on wages, increasing potential stagflation concerns. We've also seen a return, and a very much unwelcome return, of the US banking fears. There were some reservations surrounding the economy after the US data. There are also fresh concerns surrounding the banking sector, with particular focus on First Republic, as a larger than expected decline in deposits triggered a slide in the share price of 50%, taking them to a record low. As a result of all this, we did see risk appetite deteriorate. The relatively weak US data and fresh concerns surrounding banking triggered a fresh deterioration in risk appetite during the day amid contagion fears. Equities came under pressure, yields moved lower, and there was fresh demand for treasuries. The US dollar also recovered, as you would expect, given these mixed numbers that came out and the concerns. Dollar secured an element of defensive demand as equities came under pressure, and the currency index posted a limited recovery. There was also significant losses for the euro and sterling as long positions were cut while the yen gained some support. We had inflation numbers from Australia overnight. We saw a decline in numbers there. The first quarter consumer prices increased 1.4% from 1.9% previously, with the year-on-year rate declining to 7% from 7.8%, marginally above the expectations of 6.9%. And today we've got some central bank meetings. We've got the Swedish Riksbank decision, expectations there for a 50 basis point hike, taking overall rates to 3.5%. So that's it for the headlines. Let's get into some charts. Steve, do you want to kick us off with a look at cryptocurrencies? How are they faring in this volatility?
Yeah, not too bad actually, Joe. Bitcoin's had a little bit of a jump up. Let's take a look at the chart here, sharing it now. I mean, we can see it on the...
That's the US 10-year, so maybe that's why it's going well.
Yeah, maybe. We can see it a bit more clearly now. Yesterday's daily candle looking pretty decent, engulfing the previous 3 days of price action, almost 4 days of price action actually. So we're back to where we were last Thursday, around about there, and back into this area of resistance that we have on the charts. So trading at 28,400, that's it is going to be running into a bit of headwind, but it does feel like there's a little bit more upside in the market. Looking at the 4-hour chart, we can see a nice little double bottom forming here. Measured move target of that we can quite quickly put on the chart. Measured move target of that is 28,860, so up right up back into the cloud. Looking pretty decent on the 1-hour chart. Get your words out, Steve. We've broken through the cloud, and we're now in a short-term bullish momentum phase. So that's looking decent. Ethereum, that's also around, well, not far away from major resistance levels on the 1-hour chart. 1883, that's where we've just been up to in the last, well, overnight, 1 o'clock this morning, and these were levels that we saw last Saturday. So decent pullback here also. Posted a bullish hammer on the daily chart, as we can see here, after reacting from the 55-day moving average, or prices just in front of there. Then we did have a supportive line around 1800. That's probably a psychological level. And yeah, looking overall looking to target this resistance at 1889, off to a positive start this morning. XRP, also a positive day yesterday, not quite as aggressive as the Bitcoin move. We still haven't taken out Monday's high, and we're running into a little bit of resistance from the 9-bar moving average or 9-day moving average. So overall, trading around 47 cents on the XRP, a little bit more muted than the big brothers. Let's take a look at commodities, see how gold has fared. And over the last couple of days, we've seen more positive price action after bouncing from this reverse trend line and posting higher lows since the 19th of April. We had Friday, Monday and Tuesday posting a higher low. So it's looking pretty positive over this side on the daily chart. The 4-hour chart was still below the Ichimoku cloud, so still in a short-term downtrend or under there. Real resistance comes in around about the 2010 level. We got the psychological resistance obviously around 2000, and we got that big cloud resistance there. So that's the real sort of like for bulls, that's the real target area. A close ideally above that 2012 level on a daily basis would be positive for price action. Otherwise, we risk having a little bit of a reversal back down towards that 1970 support. Crude oil, again, decent price action really since last Tuesday. Oh, hold on, get the right chart up, Steve. That's your 4-hour chart. We still haven't filled this gap that we formed over the week of the 31st of March to the start of April. Got close to it yesterday, but not quite close enough. The low was 76.43. The gap is down to 75.72. And today's price action has been slightly more positive as well. We've got a couple of moving average lines. They've got a 55 and the 100-day moving average that we're holding nicely above. The 200-day is above us, really, coming in at 81.86. That's where price action stalled from the 12th, 13th, 14th, 15th of April. Levels to watch, really, this $79 level. That was the top. We've got oil inventories out later, so expect some volatility creeping into the market around about that 1/2 time UK. Looking at Brent crude oil, we had a pretty bearish day on Tuesday. Price action has bounced back overnight, but we did manage to sort of like trade at the lowest level we've been since that 31st of March breakaway gap higher, and really trying desperately to fill it. The high 79.88 and the low 80.18, so only a 20 cents difference to fill that gap. Will it be considered filled? Possibly. We're off to sort of like decent price action today, but obviously, as I say, oil inventories later could put a little bit of a spanner in the works. Natural gas remains relatively buoyant, although it was a bit of a setback yesterday. Didn't post a lower low, so still remains short-term optimistic on this and short-term positive. We've got a nice 9-bar moving average coming in around about 237 today. Really the bulls need to get price action above the 250 level, whilst the bears are looking at 228 as the key level to break to sort of re-attack the lows, the swing lows, which were down around about the 206 area. So overall, dollar index still trading around about that 1060 level. Really just been sideways, not really giving us any real idea of where the next trend's coming from at the moment. Maybe Joe can shed a bit of light.
Yeah, well, let's take a look. So yesterday we did actually post a bullish outside day candle. So we can see that we had the bearish day on Monday, but then yesterday we made new lows on the session prior to the previous day's lows, but then closed at the highs of the session or pretty close to it. Still looks as though we're trapped in this wedge. So until we get a clean break out of that, I still think we may be trading with a slight bearish bias. We do see or have seen some weakness today, down by 0.22% as things stand. I think helped a little bit by these tech names that came out last night to maybe stabilize the market. I think we had numbers from Alphabet and Microsoft which seem to have been taken pretty well. So we've got this major support still here at 100.82. So unless that's broken, the chances are we may see some corrective bounces in the short term. We've got this level here at 102.23, which for me needs to be taken out in line really with the wedge, and if we can see that, then that could trigger further gains to the upside. We do have a previous gap which acts as resistance at 102.83, so that's another area of resistance to target there as well. Clearly the overall trend remains bearish, we know that. So we are probably waiting for some sort of catalyst in order to drive this dollar higher. Maybe the fears over the banking sector could be that catalyst. So we may see a break to the upside there if that is the case. Let's take a look at some of the other dollar majors. Let's look at Euro US dollar. So as we would expect, we've seen the reverse of what we've seen on the dollar index here. So we've got a bearish outside candle yesterday on Euro US dollar, which is obviously pretty negative. And this comes in line at massive resistance. So potential signs of a bit of a reversal there. Overall, the market is still trending within a bullish channel. So any pullbacks could be limited to the lower end of that channel, which roughly come in at around 107.80 today. But obviously that's going to be a moving target as we move along on the time basis. But maybe we're going to trade in a bit of a range potentially. If the channel breaks, then that could trigger further declines down to 105.32. And of course, if we break through these highs at 110.75, then that's likely to trigger further gains towards that 61.8% fib level at 112.75. Looking at cable, we're higher today, up by 0.3% roughly. There is big resistance here. We've talked about this earlier in the week, that we seem to be trading in a bit of a range on this at the minute in the very short term. So very narrow price action over the last few weeks. Yesterday, we did also get a bearish outside candle as well as a result of that dollar strength, but it's still within this range. So the break of this range really is going to be what dictates the next move on this. A break to the downside, and we can start targeting a measured move down to 121.64. A break to the upside, and we'll be targeting this resistance up here at 126.66. So more range-bound price action expected here. Let's look at the commodity currencies against the US dollar. Aussie versus US dollar is making moves to the downside. So this has been the weakest, well, one of the weakest currencies against the US dollar. Despite the weakness that we've seen in US dollar, this has failed to keep pace and take advantage of that. And due to the strength that we saw in the dollar index yesterday, this had a pretty nasty decline. So this looks pretty ugly indeed. And I think we are going to continue to see lower prices towards our support zone, which is coming in here at a 61.8% fib level, and the neckline of this small head and shoulders bottom pattern, which comes in between 65.20 to 65.64. I imagine a similar situation in New Zealand dollar. Let's take a quick look. Yeah, broken out of this wedge to the downside, still looking pretty bearish. We've got an engulfing candle yesterday, looking for lower prices towards that 50% fib level at 60.25. Anything happening with dollar yen? These two just kind of cancelling each other out at the moment. Both seen as kind of safer haven assets to own. Not really any kind of movement either way on this for the time being. So limited opportunities for me on dollar yen right now. Dollar CAD, we can see that the dollar benefited yesterday. We found some support, not quite at this level that I'd highlighted previously, but not far off, certainly in line with this sequence of higher lows. So decent move to the upside, and you wouldn't rule out a retest of these highs back up here at 138.30. In terms of requests, I think only one this morning, so I'll get to that. That's New Zealand dollar, Canadian dollar. So let's take a look at that. So this is the daily chart. We can see here that we saw a really nice move to the upside from October last year, which then eventually topped out in December. Since then, prices have been in corrective mode ever since. We can see that there was some support here formed around 83.43, and for me that's completed potentially a triple top formation here. Prices have broke down through that level. We saw that on the 14th of April. I'd had this highlighted previously, and we've seen a decent job of well, initially a support, but then it's eventually broken down, but now it appears to be acting as resistance. So quite clearly we can see here a trend of lower highs and lower lows. So for the time being, it looks as though we are going to continue within a corrective phase, and therefore we can expect to see lower prices within this bearish channel. The next move on the downside is this 50% fib level, which comes in at 82.21. So that would be my initial target. And then below that, potentially this 61.8% fib level and a previous support or a level that I expect to act as support somewhere around there would be my downside target. So looking pretty bearish on New Zealand dollar versus the Canadian dollar. Just seen there's another request come in for sterling yen, so we'll take a look at that as well. Nasty candle yesterday. We saw this actually on euro yen as well. So we talked about this rallying into significant resistance here at 167.97. We posted a bearish engulfing candle yesterday, or bearish outside day even, really nasty, and that looks to be now setting about potentially a move to the downside. So we've seen a bit of a recovery today. So my preference would probably be to sell into 166.53. May even take a look at that as a gun to the head trade today. So I think in for a bit of a correction there on sterling yen, and we can see it on euro yen as well. Into this previous high, we got a swing failure. We posted a bearish engulfing candle, and looks as though we are potentially getting an opportunity to sell that again today into a bit of a retest of resistance. So yeah, looking for lower prices on anything, or looking for more yen strength, basically.
Nice.
Okay, Steve, let's look at indices.
Okay, mate. Yeah, looking at the FTSE, it's given up a lot of the gains. Obviously, yesterday was a pretty poor day for indices all round. We managed to break the neckline that we had from the candle of the 19th of April. That came in at 78.70. Below that, we have support at 78.50 as well. We're trading back above it at the moment, but a nice breakdown down towards that second support before we closed slightly higher. So a little bit of a turnaround over the last few hours in the 4-hour chart, the short-term chart on FTSE. This bullish engulfing candle seems to be doing a bit of a job at the moment, although it's a little bit under pressure. That candle concludes at 10 o'clock. From a hourly perspective, you can see that the price action rallied higher towards the cloud resistance and this horizontal resistance where we've got multiple touch points on the candles formed from yesterday afternoon's price action, and that we're now sort of like, we had a big spike high, we're now rejecting that. So potentially, again, another one primed for continuation on the downside for the indices in the gun to head trade idea. On the DAX, let's take a look at the daily chart first, and that's been negative. We can see price action last Friday was obviously very positive, bullish outside candle, but it hasn't managed to actually maintain that positive note and push forward. So for us as well, again, we've got potential for a double top formation. I think we can highlight it a bit more clearly on the 4-hour chart. You've got this top here and this top here, and that will give you the basis for a double top formation. However, we need to break this neckline before we get excited. That's down at 15,703, not very far away at all. We've seen the Germany 40, the DAX index, one of the most volatile indices, easily gobble up 300-400 points in a day. So that's only 90 points away. If we do get a little bit of momentum to the downside and we break that support there, I think we can accelerate very, very quickly lower. US 30, again, a little bit of a reversal, well, a big reversal really. Bearish engulfing candle from Monday's positive price action and Friday's indecisive price action. We've given up all the gains. We're back to levels that we haven't seen since Monday the 10th of April. We've bounced a little bit towards the close last night, but we're back on the negative side of things, and we're looking at this previous resistance now should be a support level, which it proved to be yesterday, around at 33,566 level. 33,530, it's a little bit lower, yeah. Trading around 33,567 now. So yeah, we're looking at around about 33,500, just above there. A break below there, and again, we could open up the downside and look to move lower. NASDAQ, similar sort of price action. We've had 5 negative days of price action. In fact, here we've had a little bit of a upward bounce this morning. Is it a dead cat bounce? Most probably. Price action yesterday posted a high of 12,984. That would be resistance today. And the low we got to yesterday before we bounced was 12,727. Again, that's one to watch. If we do get a close below the 12,831, I think we are on a bit of a sort of like more extended move to the downside. S&P's bearish engulfing candle yesterday, pretty decent one. Obviously, we had the bullish channel, price action retested and continued the break lower. We've found some support at, I'll tell you what I'm going to do is take away them fibs and stick a more recent fib, really sort of like try and find where we can look to target, see if there's any confluence areas that we can target. And we look to down here, 38.2% fib retracement would be about 435. 4,000 is a psychological level, also 50% Fibonacci retracement down at 39.90. So I think there's more room for the downside. The shorter term charts, in fact, I think it was Dow, really looks like a bit of a bearish flag building up here, with a good potential once we take out that low. So yeah, I'm still bearish on indices. I think that'll continue into the day. And yeah, let's get to the gun to the head. We had some, at least we had a little bit of decent trade ideas. We pulled two out the bag yesterday, Joe, thankfully.
Yeah, absolutely. So gun to the head trades. This is where Steve and I pick trade ideas live on the stream. We're running them on a live account. We put £2,000 into a trading account, and we're slightly down from where we started, but you know, we're experience of it all, and we pick stops and targets, of course, of these ideas. Risk reward ratios must be better than 2 to 1, otherwise we can't get them on, and we close these ideas out at 9 p.m. so they have a finite lifespan that they run for. We risk 1% of trading capital. That's our money management rules with regards to putting these ideas on. So we're never in danger of blowing up our trading account by taking that approach. So let's have a quick recap of yesterday's ideas. So Steve was looking for a breakdown in the S&P 500. And we can have a quick look at that. That's on our profile at signal_center on TradingView. If we click the play button there, we can see from the point that Steve put the trade idea on, it pretty much went straight to target. So well done, Steve. That was a nice 2.23R win yesterday. And we saw a similar thing in Euro Yen. This was my trade idea. Noted the engulfing candle on the hourly. It hadn't completed at the time, so it was speculative. But thankfully, it played out really nicely and again went straight to target. So a couple of wins there for us yesterday. Just under 4.5R between the two of us. How's that? What's that done to our account balance, Steve? How are we looking there?
Yeah, it's picked up a little bit. We were just down below 1900 yesterday. Obviously, we've added £80, which is pretty decent, around about 4%. So yeah, pulled it back. We're only down 1R, Joe, since the start of the year. So not bad, not bad.
Not great, but not bad. But you know, we are coming up with these ideas pretty much instantly. There's not much consideration going into them. We're just picking things that are looking right now interesting from a technical perspective, and of course, we're not giving them too much of a life to run. But yeah, we're in the game. And you know, it just goes to show by having these bigger, much larger winners than your losers, you know, that 2 to 1 risk reward ratio, that is really key to all of this. So Steve, looks like you're lining up another S&P attempt here.
Yeah, you know what? I feel like I should be going for it again. Didn't know whether to go for that or, I mean, EU 50s under pressure. The Europeans definitely look, DAX breaking quite aggressively lower and FTSE reversing sharply from that spike higher. So definitely seem to not need to convince the Europeans that we're turning around. So I'm going to just be a little bit aggressive for this one as well and see what we can get on. I'm going to keep the stop pretty tight, so it's always a bit of a lot more high risk when you do things like that. Looking to risk 1%. Stop, I might leave it where it is and look to target that. That's 2.18. It feels like it should be more more reward. It looks like more than 2 there. Oh, on here it's 3.46. So what am I doing wrong? So price 462. Getting short at market 489. Stop 4102. Let's just get that on and see what it looks like. No, the stop is way too high. What have I done there, Stevie boy? That was a bit silly. Oh yeah, the stop I had here was 498. That's why it looked better. Anyway, I'm on now 4102.2 and 62.8. That's me lined up. 2.37 to 1 on this graphic here. I think I've gotten a little bit lower, so risk reward isn't quite so good. What do you think, Joe? What's your
I'm going same
one
as
you're
you.
lining up?
I'm repeating the same trade I did yesterday. This was euro yen. This is the trade idea I did yesterday. We've seen a decent correction from yesterday's lows that was in line with this support that we'd highlighted as the target area, and we've recovered 38.2% of the down move yesterday. So I ideally would like to get it a bit higher, really, at the point where we've got a 50% fib level and a retest of this broken trend line. But I've got a gun to my head, so I've got to go right now. But I like it anyway, so I'm going to sell it at the current price of 147.19. My stop loss, yeah, I mean, ideally I'd like it to be a bit higher, but let's go with that. So 147.81, it's quite wide, which means I'm going to have a bigger target. So let's have a look and see if we've got anything here that's going to give us a bit of a clue. So from the automated Elliott wave count, it's suggesting that this is the B leg higher, suggesting there's going to be a decent C leg correction. I'm looking also to see if I've got the volume point of control, which is pretty much coming in around current prices at the minute. There's a bit of a vacuum down here into this level. So let's go for a bit of a humdinger, shall we? Down to there. We can see a couple of touch points there as well. We can see one there and a couple there. So that looks good enough for me. I'm going to go with a target of 145.44.
Right, let me just get those on, Joe, again. You have to walk me through those levels again.
Okay, so stop 147.81.
Create new order, sell 1%, 147.81.
Yep, with a target of 145.44.
Gives a 2.93 risk, nearly 3 to 1.
Yep, that's about right.
All right, let's go for it. Go on. Good luck with that.
Okay, cool. So we've got two trade ideas on today. There are a couple of bits out today that we need to be aware of. So we've got US durable goods orders, which are due out at 1:30 UK time, and then we've got the oil inventory numbers out at 3:30. Tomorrow, a bit of a big deal. We've got the US GDP number, the Q1 advanced reading. So let's see what that does for the markets. Obviously, we've got some other factors at play at the minute with regards to the banking sector in the US. And fears of stagflation. And on Friday, we've got that Bank of Japan policy decision. So if you are trading yen, do be aware that that's coming on Friday, and that could create significant volatility. Talk yesterday that they are going to maintain loose monetary policy in line with what they've done previously. But again, there could be some substantial volatility on anything linked to the Japanese yen. Okay, Steve, I think that's it from us today. Just going to wrap it up in under 30 minutes, so that's perfect. Thank you, everybody, for getting involved, and we'll see you all tomorrow.
Yeah, cheers all.
Bye-bye.